The numbers are out from USDA's mid-year cattle inventory report. We have analysis in this week's Market Watch.
Market Watch, brought to you by Fort Dodge Animal Health.
We're joined this week by Randy Block, CEO of Cattle-Fax. Randy, it's good to have you back.
Thank you, Susie. Good to be with you.
Did you have a good summer?
You betcha.
Good for you. Let's start with some of the highlights from the mid-year cattle inventory report. Well,
there wasn't very many surprises in the report, Susie. The cattle inventory number continues to shrink. The nation's cow herd is smaller. Year to date, we've seen more cows harvested, more heifers harvested. So as we look down the road over the next few years, we're going to have fewer animals out here to move through our production system.
What do these new numbers mean for the industry over the short and the long term?
Well, as you look at the increase in grain prices that we've experienced over the course of the last 12 months, we've been warehousing feeder cattle, not placing those animals into the feed yards as early as normal. So we do have a larger feeder cattle and calf supply that can go into these feed yards over the next 4 to 5 months.
Okay.
That number is up about 300,000 head. So we'll see bigger production, a big seasonal change in production. The smallest supplies we'll experience will be in the fourth quarter of this year, but we need to anticipate that we'll have much bigger supplies into the first quarter of next year. But all in all, we're looking at smaller beef production levels in 2009 compared to 2008, and that will likely continue on into 2010.
Okay. Well, it's kind of obvious then that a contracting cow herd is going to have wide-ranging effects. What does this mean for each segment of the industry?
Well, I think when we step back and take a big picture view, the bottom line is we're going to have higher prices. Smaller production, exports continue to grow. We're very quickly regaining export market share. We're going to have smaller per capita beef supplies here in the U.S., so prices should be able to continue to move higher. We anticipate that we'll have record high fed cattle prices in 2009. We're going to have record high prices in 2008. So that will help support feeder cattle and calf prices here in the next few years. Okay. The biggest risk there is higher grain costs, higher hay prices, higher production costs all the way through those segments.
All right. Okay. Well, Randy, as always, thank you very much. Your information is invaluable.
Thank you. Glad to be with you, Susie.
Thanks. For more information on this topic and other industry analysis, visit Cattle-Fax.com.